Welcome and thanks for joining us on Real Investment News. I'm your host, Scarlett Fakar. Home prices jumped to all-time highs in almost 2/3 of U.S. cities in the fourth quarter as buyers, well, they're battling for a record supply of listings. At the same time, household debt is rising. Today, we have Real Investment News analyst John Coumarianos in the studio. And John, let me ask you, what are these trends saying?
So we're seeing definitely high home prices again. Not quite as high as the bubble peak in 2007, but very high prices. So we built a chart relating home prices across the nation to median household income. And we saw that through the 90s, it stayed relatively steady at about 100. We indexed it to 100 in 1987. And you can see the bubble forming in the early 2000s and peaking at almost 160. Then you see the decline, and now we're back up to 120 again. So not at the bubble peak in the 150s, but definitely higher than 100, and so that indicates high home prices.
Yeah, that indicates high home prices, and you said it a couple times, bubble, and I know that's a word that everybody is, a bubble. Is that something that we can expect, or we just don't have enough information at this point in time?
We don't know exactly yet, but I took the liberty of doing another calculation called standard deviation, which is just a measurement of how volatile this price line or price to income line has been. One standard deviation is 16, and many people take the definition of a bubble to be 2 standard deviations. So if we get to 132 or 2 times 16, we can maybe say we're at a bubble at that point. We're at 120 now, so we're not there yet, but it looks like we might be approaching it.
Yeah, absolutely. So that's something that you want to keep an eye out. But John, I also want to let these folks know that today the Federal Reserve Bank of New York, they report that household debt rose by $193 billion to $13.15 trillion last quarter. Huge numbers there. The fourth quarter increase was mostly driven by larger mortgage balances, which rose by $139 billion last quarter to $8.88 trillion. Mortgage loans account for about 2/3 of all household debt, but still, overall, mortgage balances do remain below pre-recession levels. But looking at this chart, you can see credit card debt is rising. Consumers did add $26 billion to credit card balances in the fourth quarter, a lot, bringing the total to $834 billion. Auto loans are also rising, and student debt loan is also at its highest. At the same time, National Association of Realtors reports prices for single-family homes reached a peak in 64% of metropolitan areas measured. It's just not a great trend to see right now, John, but of course these are things that we are going to be looking out for here on Real Investment News. So thank you so much for everything that you had today, and they can find out more on realinvestmentadvice.com as well, right?
That's right. Thanks for having me, Scarlett.
Absolutely. See you guys soon.